The National Payment Systems Act 2020 regulates payment systems and issuers of electronic money. This includes remittances and electronic payments, electronic funds transfers and cards payment, among others.
As an industry, we are working towards shared infrastructure, which should be able to reduce the cost of duplication, which is embedded in the pricing today, because every institution has its own capability and has invested individually. So shared infrastructure is one way that we'll be able to bring down the cost of digital financial services.
Bank of Uganda is responsible for issuing licenses and enforcing the provisions of the law. Addressing the congregation at the Sheraton Hotel, Kampala, the Deputy Governor, Bank of Uganda, urged financial institutions to accelerate digitalization in order to ensure there is provision of more innovative and efficient banking services with potential to reach customers on a large scale and accelerate financial inclusion.
The new law is a transformational addition to the payments framework, and the process of drafting the implementing regulations is now at its tail end, which we expect is going to enhance risk-based regulation of the payment system.
Although there are numerous benefits and opportunities presented by the new law, stakeholders have concerns. For instance, the requirement for companies issuing electronic money to have primary data centers in the country is seen as expensive and unnecessary in the era of cloud computing.
Our intention as bankers is to engage our regulators in the hope that this will be reviewed to allow us to adopt more recent, more evolving, more agile, and of course cheaper technology in the form of cloud computing. So we already have a paper out as the Bankers Association going to our regulators so that we can review that particular clause.
A partnership between fintechs and financial institutions, crucial in driving innovation, affordability and financial inclusion, was also emphasized.
We have to build and change customer behavior on making digital payments. If my nearby Duka is going to accept cash and have cash in my pocket, I am not going to walk to an agent, convert that into digital money, and then pay a cash. The transaction cost is just too high. So the question then becomes is how do we make sure that people actually earn money digitally? Because if you don't earn money digitally, you're never going to spend money digitally.
National Payment System Law is seen as a customer-centric policy vital in promoting financial inclusion and a cashless economy. Dennis Igoa for UBC Business.